Welcome to the Recon Trader. In today's video, I will share with you some tactical analysis over on the Bitcoin chart, and we will be taking a look at Bitcoin's possible next move. So let's get right to the charts. And we will start over here on the Bitcoin CME Futures Daily Candle chart. There are a couple possibilities of playing out over here on the daily chart. The first one is we have some bullish divergence that has been setting up, and as you can see, that bullish divergence typically is only valid for a couple of days, generally speaking. However, the more bullish divergence we get, the more bullish, in theory, the RSI is becoming, which would basically be a measure of momentum in the bull's favor. As you can see on the first bullish divergence we received back here, we got a couple days of bullish momentum, only to sell off for the next 4 days, where we once again get that bullish divergence, and we did see the price move up. However, the question will be come tomorrow, which is Tuesday. Today is a holiday in the US stock market. The question is, what is Bitcoin's next move? Does this bullish momentum continue on Tuesday, or do we see a repeat of what we saw back here, 4 days of selling off? Currently, with the information we're given down here on the RSI, we do see momentum somewhat favoring the bulls, and if that's the case, perhaps over the next week, maybe 2, Bitcoin's price perhaps starts to move back up. However, it will run into resistance, more than likely around the 23,000 level. But if Bitcoin's price can breach that 23,000 level, which would be a level of resistance, we could see a push back up towards this 28 to 29,000 level and perhaps fill this gap over here on the chart. Now, if that did happen, you would want to proceed with caution, as a breach of prior resistance and a push up into this area could be the makings of a bull trap. A bull trap occurs basically when the price has been trending down. It does push up, breaks prior resistance, only to eventually turn over and sell off even further. Now, with that being said, selling off even further is a possibility when the market opens tomorrow. We may just see a repeat of what happened back here on this bullish divergence, where we saw the price push up for a couple days and sell off for 4 days straight. We may open tomorrow with a 4-day sell-off, and so based on the intel over here on this chart, that is what I'm looking for. Either a push up to around 23,000, or on the flip side, a sell-off down towards 16,000. Now, if we jump over here to the weekly chart for Bitcoin USDT on the Binance Exchange, you can see the most recent weekly closed candle, which closed yesterday, today is only Monday, was once again a bearish candle and has pretty much come right into this support zone we mapped out a few weeks ago. And this zone was based on prior resistance and prior support way back here where the bull run initially took off from. And so this zone, which is essentially between 19,500 and 16,000, is the next level of support we're looking for Bitcoin's price to hold. If it fails here, then we could be headed down to around 13,500, which would be the 2272 on the Fibonacci's. However, if Bitcoin's price is able to push up this week, we would more than likely see resistance again at that 22,000, or again the 1618 level is set at around 23,500. Anywhere between basically 22,000 and 23,500 is going to be an area of resistance for the Bitcoin price towards the top side. Now, looking out a little further, if Bitcoin's price can push up to these levels and maybe a couple weeks out even breach that 23,500 level, then we're looking back up at the 1272 level on the Fibonacci's, which happens to come in just around that CME gap of 28,700 or 29,000. This level, realistically, I think, is going to be a very strong level of resistance for Bitcoin's price, as it was a strong level of support here. a strong level of support back in this area, and even back in this area it was a strong level of support. So what typically happens, strong levels of support will typically flip into strong levels of resistance, and this is where I could easily see a trap snapping shut on Bitcoin, and then it would sell off even further, perhaps down to around 16,000 or even this 13.5 level, which is the 2272 level on the Fibonacci's. And so with that all being said, the theory would be if Bitcoin does bounce, I certainly don't expect a recovery at this point in time, but I could certainly see a bounce over the next few weeks. That bounce would more than likely stall out around this 29,000 level, and then we could see a further sell-off to even newer lows, which again I would be looking at 16,000 to around 13,000. And so with that in mind, if we jump over here to the options open interest by strike price, you can see for the closing options expiring on July 29th at the end of this month. Obviously, we're just at the beginning of the month, so we have a long ways to go. But these are some figures to keep in mind. The maximum paying strike price would be 25,000. And as far as the call options go, or the bullish options, which are in the green bars, you can see they have the biggest amount of bets placed over here at 30,000. However, as I mentioned on the other charts, they'll probably run into resistance around 29,000. Now on the flip side, the bears, or your puts, would like to see this price pushed down to around 15,000 is where they have their biggest line of bets stacked up. And so getting down to around 16,000 to 15,000 by the end of the month and setting up a giant bull trap would certainly be in favor of the bears. Now, for something completely different, if we take a look at the VIX, which is basically the volatility chart for the S&P 500, and that is measured in the blue line here, versus Bitcoin, which is the orange line you see running through the chart, you can see that anytime the VIX, or volatility for the S&P, is low, Bitcoin proceeds to run up. However, when you see VIX spiking, like you see the spike going up here, you see Bitcoin selling off. And so I basically highlighted a few different areas where you can see the VIX is dumping, Bitcoin is pumping, and then when the VIX starts to recover over here, you can see that Bitcoin dumps. Same thing on this chart where we can actually see volatility, or the VIX, dropping. Bitcoin goes up to all-time highs. However, once the VIX starts to rise, we see Bitcoin sell off. Now, I bring this chart up not as something to use for day trading, but more of a long-term scenario. And the volatility over on the S&P 500, or this VIX chart, also can be a measure of fear in the market. And obviously right now there's a lot of fear in the S&P stock market, and thus there is a lot of fear over in Bitcoin, and we see this correlated sell-off. Now, if somehow the fear can decrease over in the S&P 500 or on the VIX chart, we could in theory see the VIX drop and Bitcoin pump. And so I will definitely be keeping an eye on this chart more for long-term analysis rather than short-term analysis. So I think that's enough jaw-jacking. To wrap everything up, I'm looking at right now if Bitcoin is able to pump up, then we're looking at resistance around 22,000 to 25,000. After that, I would look for that gap to perhaps fill on the CME if the price action continues up around 29,000. On the flip side, Bitcoin bulls really need to hold the 19,000 level for support. If that breaks down, then we're looking back at the 17.5 to 16,000 level. I think the 16,000 level would be your last line of defense. If the bears crush the price down below 16,000, then I would be looking at around 13.5. So with that all being said, if anything major changes over here on the charts, I will do an update video. So you might want to shoot that subscribe button so you don't miss any updates. If you like this video, do me a favor, spike a like. If you have any questions or comments, drop them in the comment section down below. And in closing, remember, never send your money into battle without first doing your recon. See you in the next video.